What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for the Spider S&P 500 ETF Trust with the ticker symbol SPY. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. So I removed the sound effects, guys. I know you guys didn't like it, but I was just having a little bit of fun with it. So, I do appreciate the advice because there's some things that I will personally not be able to see in my videos, and you guys may be able to pick it up that I'm not seeing, and it could be detrimental to the videos or the channel. So I appreciate the feedback, and let's just continue doing it the way I've been doing it. And let's take a look at the chart now. So let's just do a little bit of summary. It's just always good idea to review, to see if anything in the past is different that you did not see before. So basically, we have this bullish imbalance this October of last year up until July 2023. How do I know it's a bullish imbalance? Because price just continued higher for the most part. There was pullbacks inside, but for the most part, price continued higher up until July, late July. So price made two legs up. So this is one leg right over here. And then once price stopped correcting down, that's when the second leg can form. And you can see the target was met same time, right about July. So we had one leg up, two legs up, and the target was also at prior resistance. So this 450 level was prior resistance. There was support right over here, resistance here, support here, resistance here. We did see a couple pushes through it, so it could be moved up, but I'll just leave it here for now. Actually, yeah, I'll move it up because it looks like we did see better reaction at the top. So you can see that we're finding better reaction at the top. And remember, guys, the lines, any drawing you put on your chart, you have to consider it dynamic. Don't ever consider it static, because see how I left it back over here? Because it looked like it was getting more reactions there, but we just reacted recently better right over here at the 457 level. So the lines are dynamic. It's just like anything in life. Nothing is really standing still, just like atoms and molecules are always vibrating. So you got to consider this line right here vibrating. So it's moving like this. So it's never fixed. It's always dynamic. So that's way, you don't make a mistake considering that, oh, look, we broke above the level. But technically, it fits better right there. So anyway, we found resistance at the prior resistance and the top side of the yellow channel and the measured move target. So three strong areas that can lead to a reversal back down. So we got the reversal. So we have a bearish imbalance now because there was a sharp move down in this uptrend. So this is a bearish imbalance in the micro scale. We're seeing a move down, and that's what this blue channel represents. And also we can also put an arrow on that impulse because now the impulse is broken, meaning we're seeing a slight bullish imbalance to this chart. So we see this impulse right over here, and now we're seeing a correction. So this is what I showed my members, that we can get a two-legged pullback. We could have taken off right at the top of that big red bar, to the opposite side of the channel. But to be safe or to expect lower prices, it's usually you'll see two legs instead of just one. Sometimes you'll see a simple pullback, which is just one, but most times you'll probably see a complex pullback, which is two legs. So this is what I'm expecting to occur. Since price had an overshoot of the blue channel, we could have seen a reversal right then and there above the 443 level, and the trend could have reversed after that micro bearish imbalance was complete, something like that. But since we got a harsh rejection from the 443 level or the 444 level, and we're still below the EMA, that tells me that this downtrend is having a stronger influence than this uptrend currently in play. So that tells me we can see more downside after this correction is over for this downtrend. So that's how I'm looking at it. Basically, we had an impulse up correction. We can get another leg up. Obviously, this is just an estimate. We can always go a little bit lower, and then the arrow would be moved lower. But this is looking like the starting point of the second attempt higher for the bulls. So it's targeting, the 447 level. It might just wick right through. So sometimes when it's like through a resistance, you'll see the candle break it, and then it'll probably close back down on, its low. So like a wick candle. So that's very common to see, when it's like at a resistance level. You just see it wick right through. So the same thing like this right here. You can see how this candle wicked right at the prior resistance, the 450 level, and then closed lower. So the same thing can occur over here. Okay, I don't want to get too, predicting like every single little thing, but this is what I see playing out. I mean, it looks like the bulls aren't strong enough to drive up the price as of right now. It looks like the bears are taking the dominance, And you can see that in this correction playing out because we could have seen a massive move up higher. But why is he getting rejected? Because his downtrend wants to continue lower. So that's what I'm looking for. I'm looking for more downside. Obviously, this measure move target is not exact. It could be a little bit lower, depending on what type of reaction we get. It could be a little bit higher, something like that. We can always overshoot the measure move target, the small one, or we can undershoot it. But this is just a general idea of what can occur because price is trying to reach the opposite side of the yellow channel, just like we hit the top side. So that's what I see for SPY. Basically, I see more downside. I don't see anything crazy just yet. This is still a uptrend. Price is still within the uptrend. It's not like I'm analyzing the price action outside of the uptrend. It's still within the uptrend. So we can still get a reaction off the channel support right over here. And another thing to mention is that since we're still in the uptrend, this is something, you have to keep an eye on. A lot of times, we might not reach the opposite side all the way. We might just stop halfway. So even though if we do see another leg down, a lot of times if we're still in the uptrend, it might have a really strong influence and the price may not, continue down lower all the way. So that's another thing to keep an eye on because measure moves aren't always reached. So, just to keep an eye on those things that I mentioned, keep an eye on your lines, make sure anything you draw, even the channel, I consider it vibrating like this. So it could be a little bit off like that. It doesn't have to be perfect. So, the lines are always moving. Even though it looks like they're stationary, you have to imagine them moving. Everything is moving, except the arrows. I guess the arrows, they're kind of permanent, because you already did see the impulse. So they don't really come back into play. So either way, I'll just keep an eye on the channels and the lines. So let's take a look at the weekly chart. So here's the weekly chart, and I do think, the trend has reversed towards the upside in the macro scale because we did see this nice impulse from 2020 up until 2021. And then, traders are watching this correction play out, or investors. So we had a downtrend that this green channel represents, a break of the downtrend, 2 legs down, which is, textbook price action. And then we also broke outside of this trend line right over here. So it looks like the downtrend was played out because it was getting weaker. We broke the trend line, which is showing a shift in imbalance. And then, bulls took off. And before, price was getting rejected from the EMA and barely above it. Now we're getting above the EMA for the most part. So it looks like the trend has reversed. You don't know for sure. We can always just collapse back down, the 417 level all of a sudden. But the expectation is that it wouldn't, obviously because, we have support in the way. So the expectation is that the trend will continue higher after the pullback. But does the market do always what you expect? Not really. So we could just continue crashing down too. But the expectation is we won't. Anyway, so we have this nice impulse up from 2020 to 2021. If we have bottom, which it looks like price did, then we could be seeing the formation of the second leg up because the market generally moves in twos to the 610 level. So, price is on its way over there. It could be, getting there maybe next year. Mid next year, late next year, we'll have to wait and see. I don't like to give time targets because things can always take longer or shorter than they appear. But either way, that's all I have for SPY this week. Now let's take a look at QQQ just real quick on the daily chart. So here's QQQ on the daily chart, and QQQ isn't as bad as the SPY, but it will probably drop down lower because if I'm bearish on the SPY in the short term, there's a good chance that QQQ will also drop down lower. So QQQ is definitely in this green uptrend channel. How do I know for sure? Because you can see that we got the confirmation right over here. This was the initial start of it, the channel. Well, this is the second test. This is the actual confirmation when you see 3 touches. So you can always draw like 2 lines on any swings, but when you see 3, I mean, it's looking pretty good, especially if you get also 3 rejections off the top. So this is clearly a perfect fitting channel that represents this uptrend. So we can do this again. What does the price tell me? There's a macro bullish imbalance. Clearly, there are more aggressive buyers in the market than aggressive sellers that want to drive up the price than drive down the price. But in the short term, who's winning? It's the bears. This is a bearish imbalance, because we have the downtrend break. We got rejected from the 370, 369 level. Actually, this line can also be adjusted a little bit higher. So you see that we got a little bit more reaction off of here. So we got resistance here. Price broke it. Try to find support in the middle at the early August time. Broke right through, found resistance again. So clearly, this 372 level is something you have to keep an eye on, if you want price to continue higher. But if you want price to go lower, then you want basically price to stay below it. So what's happening is that we're seeing a bounce off the channel support, but we're getting rejected from the 372 level. So we just got bounced off a channel support just recently. So maybe we do the same type of pattern again for the SPY, because usually these markets are intertwined. They're very relative and correlated. So we can see 2 legs up, maybe not all the way to the measurement target, and then we can get the second leg down. We'll have to wait and see. But again, if we just push through the 372 level and hold it, that would tell me that obviously all of a sudden the aggressive buyers in the market got stronger than the aggressive sellers, and they don't want to go lower. They want to go higher and continue with the uptrend, because overall this is still an uptrend, and we're just waiting to see what happens over here. Are we going to see the next leg down, depending on how weak the bulls are, or the bulls going to be able to hold this channel support, drive up the price above the 372 level, and then continue higher. So it's just a waiting game. If price does pull back, I'm looking for the measure move target, maybe around the 350 level, and then the 320 level I marked because it was a breakout point, and a lot of times the price may pull back all the way to the breakout point. So that's why this red circle is over here. So we could just see overshoot a measure move target to the 320 level, and then continuation to the upside. So that can also occur. So that's all I have for the 2 indices today. This is Vee Trades, and thank you for your time.
The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now.